All right, welcome to the Voice of the AI Revolution podcast. We are your hosts. He is Oliver Yarborough.
Yes.
I am Kirk Hunter, and today we have a special guest, Mr. Frank Bria. Used to be the CEO of Scale to Success, but now he is the CEO of High Ticket Program, and he essentially works in the AI field in the financial industry. So he's dealing with Fintech. How are you today, sir?
I'm doing great. How are you?
Doing absolutely wonderful. So kind of walk us through how AI and the financial services work together.
In the last 10 years or so, there's been a lot of work. It started with IBM and their Watson computer that, for those people who are kind of familiar with it, was the one that beat Jeopardy, the Jeopardy contestants. But Watson made its debut in the banking sector as kind of the first real AI application. And since then, it's really taken off. It started off sort of in the customer service area, helping agents understand all of the policies and procedures behind the bank so they could put in real text questions into a search engine and get out, how do I help this particular customer? And now it's started to move over into things like helping you recognize if you're going to overdraft your account, finding the right products and services for you, and continuing to humanize an automated marketing function so that banks can, through a chatbot, essentially have a conversation with people on their website. So lots of different things that have moved out through the banking space recently.
And you mentioned something that I think touches a lot of folks. So you're saying that AI can actually help figure out when you're about to overdraft your account?
Yes, exactly. So one of the newer and more fun, I think, applications of AI in banking recently have been there. A couple of fintech startups, probably one of the most famous ones that literally just called Dave. It's an app called Dave. And what they'll do is they will connect to your bank account. They start to look for transactions such as deposits from your paycheck, and they scan across your history, about 3 months of history, to take a look at what your typical bills that you would pay. And, this requires some sophistication because most bills are not the same amount or the same day. If you pay your rent, that might be the same day and it might be the same amount. But if you pay your utility bill, that might be 1 or 2 days off. It's going to go up and down, as the months go. So what AI needs to do is it needs to look at all those accounts and use an algorithm to figure out, is this a regular monthly expense or was this kind of a one-time thing? Maybe, you went out to dinner, or maybe you went to an amusement park and it was a really big expense, but it's a one-time thing. So what AI does is it scans all of that information so that every single transaction, it can kind of line it up mathematically to say, oh, okay, well, this is so out of range based on when we think you're going to get paid again, you're probably going to go under. And so what these apps will do is notify you and allow you to take a short-term loan to cover it so that you can avoid overdraft fees.
Are we already sort of getting that, Frank, in the sense that, all right, so for example, if you go to your bank right now and you deposit a large check, based on your history, they're going to hold that check for a while. I just had this happen where, something unusual, deposited like a check, and they decided to put a 7-day hold on it. And I'm like, why? Well, because this is unusual based on your past history. I've seen this happen even with the credit card companies, that they will put holds or they'll block or they'll call you based on what they call unusual behavior. And we know that there's not a human back there monitoring that. Like, that's a system generated thing. Yeah,
that's absolutely right. And so the banks have had this, what I'll say modeling technology, even pre-AI, they've had statistics models that help them predict things like fraud, unusual activity, are you going to pay back your car loan, stuff like that. So they've been using that on their end. And I would say that banks in the last 15 years or so have become very sophisticated in the use of data and analytics. What's interesting, though, is that since AI has come on the scene, which is a little bit different than just statistical modeling in general. AI is a very particular technology that allows computers to solve problems they haven't seen before. So it takes it one step further. And what's really fascinating, I think, now is that Fintech, the folks outside of the bank, alternative financial providers, are the ones who are picking this up faster. The banks themselves are sort of slow to adopt. And so, they still have these programs, where they're saying your deposit's a little bit unusual. I think most people who have a credit card or a debit card have experienced traveling someplace and having the thing shut off on them and having to call the bank. And, So those fraud detection systems are becoming more and more sophisticated as well. And so what's really nice is that we're starting seeing an equalization of technology, so that outside bank providers are having the same kind of level of analytics that the in-bank providers are having. That's a really fascinating dynamic now.
What are
it's
some of the
almost like
alternatives?
an arms race of intelligence to see who wins that.
Interesting. You had mentioned alternatives to traditional banking that are using artificial intelligence. I just wanted to get a sense of what type, like in general.
So this is one of the things that's really exciting right now in Fintech is what we're seeing smaller, essentially what are called monoline banks. So that they don't do everything. All they do is they just take deposits, or they maybe just do mortgages. So they're just kind of one thing, and they're coming up as fintech players. Rocket Mortgage from Quicken Loans is an example.
Oh, okay.
Another example are of the smaller banks that you'll start to see them in the UK. Simple was one bank that was purchased actually by BBVA in the United States, and then was rolled into their main bank. So there are a number of, Move-In is another bank that is all an app, right? So there's no brick and mortar. It's literally all on your phone. So these newer financial players are coming in, and rather than try to compete with the entire bank, they're just picking one segment of the financial need, and they're trying to develop an app around that. So depending on what they do, they develop their AI capabilities specific around that need. Whether it's deposits or mortgages or auto lending, they're able to customize it and tailor it.
So I guess going along with that, because you're basically talking about disruptive forces and people who are using innovation, what has been your experience with people such as Square and the Cash App, Venmo, PayPal, different things like that? I want you to talk about from the inception when they first started to kind of where they are now and the place that they have in the market.
Yeah. So the whole peer-to-peer payment space is a fascinating one. There were a number of players that did peer-to-peer payments internationally for a long time, but PayPal was probably the one that made it common. Now everyone has some kind of peer-to-peer payment capability. So what's happening is it's an interesting fight between the alternative players like PayPal. I mean, Venmo is owned by PayPal, so Venmo is kind of PayPal's new version to try to update its look and feel, update its customer experience, but fundamentally it's still PayPal. And then you've got, on the flip side, you've got the banks that are trying to do their own version of this, and the winner right now, anyway, of the horse race is Zelle. So Zelle is kind of the bank's version of peer-to-peer payments, and then you got Venmo, that's kind of another version that it's outside of the banking system. So right now you're trying to see the two fight with each other. Most of the bigger banks are adopting Zelle because they want to keep the entire payment infrastructure inside of the bank. And Venmo is sort of one of the bigger ones right now, which is making the customer experience and the data and analytics so intelligent that it's a user experience people want to use, whereas Zelle is a little more complex. But at the end of the day, the person who wins the payment war will win the data, because that's what they're fighting over. They're fighting over the data. They want to know exactly where every penny is going and who's being paid, so they can take that data and create other apps out of it. So it's interesting that there's this fight going on between banks and the alternative financial providers, but what they're all really trying to get at is our data.
It's very interesting, like you mentioned, the payment wars, because as I was sitting here listening to you, I just thought, man, this sounds like the streaming wars. It sounds like Netflix and Amazon and Disney and, just all these companies. I'm like, so how is it going to shake out? I mean, I know that we're talking about artificial intelligence here, but we can't talk about artificial intelligence and financial services and fintech without looking at the macro, right? So if you could just extrapolate, if you could just look out into the future, like say 5 years, where are we going to be with these payment wars? Where's it going?
Yeah, that's a great question. And I think what's going to happen is, and of course, any prediction of the future is going to be a little off, right? But I think what's going to happen is...
We're holding you to it, Frank. Whatever you say right now, written in stone, can't be changed. Just kidding.
That's right. As we like to say in modeling, all models are wrong, but some are useful. So this might be useful. So what's going to happen? I think we're going to see the payment wars are all about the data, right? And that's where the answer lies, because the future of the value of the financial services industry is in data. It's in use of the data. It's in leveraging the data to sell new product. It's in leveraging the data to pass on leads to other industries. It's in leveraging the data in order to create a better financial situation for the customer. So anything is about the data. So in the payment space right now, what's happening is that it's a battle for the hearts and minds of younger users, of millennials and Gen Zers. And so whoever has the easiest way to interact, whoever creates the customer experience, which is smooth and easy, is going to win. But what we do know already is that the path to disintermediation is already set. So even if the larger financial institutions stick around as they're kind of the way that we see them today, they are no longer going to be the person or the institution between us and our money. That has been the history of the banking industry since it arose. As with everything, Netflix, brokerage, almost every other space has experienced disintermediation. Banking's going to see the same thing. We're no longer going to probably go to one bank for everything. Instead, we'll probably have an app that allows us to manage our money across a number of different fintech providers based on the features and the benefits from those different providers. So we'll probably have a different fintech provider or institution that handles our deposits. We'll probably have something else that handles our mortgage or our car loan. We already experienced that a little bit in the banking space, but the fintech industry is going to make that disintermediation even more so.
I mean, you're touching on something that's very sensitive and very apropos for a lot of us, especially those of us who travel internationally. As a person who's been traveling internationally for a while, I mean, I can really appreciate the technology, not just from a banking standpoint, but just from everything, video calls and all, but the ability to transfer money and be able to deposit and withdraw money and get paid from a business standpoint, to be able to get paid internationally. That used to be a really big hassle 10, 15 years ago. But now it's not an issue. I mean, you can get, in addition to obviously wiring money, I mean, you can get, all these PayPals and apps and stuff. I mean, I can get money instantly from somebody in a completely different country that was much more difficult years ago.
Yeah, that is absolutely true. And one of the things that, again, experienced the disintermediation, it took the international wire service out. It used to be something which individuals and small businesses couldn't access. You had to be a larger business or a bank to access that. And now other fintech providers have come in to make that easier. One thing I will say about that is that in the United States, we are a bit behind in this area. If you operate in Europe or if you operate in Asia or Africa, where things are moving very fast in the entrepreneurial world, you're finding that the technology to allow for international currency transfers between businesses works much better over there than it does here. So here in the United States, still a little tricky. You still have to find specialized services. And sometimes down to the country level, there are specialized services in the United States that will remit only to India, as an example, or only into Mexico. And so it's still hard to find a really good, solid platform across all different currencies. And that's an area where we're behind in the United States, I think.
Even I see Bitcoin and all, I mean, especially like in some African countries, I've noticed that they're moving towards digital currencies, like not even having physical currencies and dealing strictly with Bitcoin. I mean, I see that being a very disruptive area in fintech as well. So
absolutely. So and there's two really different areas there. digital currency has already sort of taken hold in a number of places. In fact, in Sweden, it's almost gone to the place where you can't find cash anymore. In fact, the government had to sort of intervene to make sure there was enough cash in the system to keep things going because everything had already moved to digital. When you talk about Bitcoin, you add in now the additional complexity of cryptocurrency. And cryptocurrency is the wild west of finance, because there's no governmental agencies that are monitoring. This is truly peer-to-peer. It completely moves outside of the regulatory space. And so no one's really sure exactly how this is going to work. In some sense, I use the Wild West analogy on purpose because, back in the early histories of the United States, there wasn't $1 bill. There were lots of different dollar bills printed by lots of different banks. And when you got a dollar bill, you weren't sure if it was a real dollar bill, if someone was really going to give you money for it. And in some sense, in cryptocurrency, we have a similar kind of a scenario where I might get a Bitcoin. I don't know exactly what the value of it is. It goes up and down. It's very volatile. And then you have the worry that some governmental agency might step in and start to regulate it later or try to regulate it. And then Bitcoin's not the only cryptocurrency. There's lots of new ones out there. People are creating new ones every day. So it is quite the Wild West right now in terms of the finance world.
I guess we can kind of further the Bitcoin conversation. There's also, with the exchanges, because there's no regulatory agency, there's also not really an apparatus legally where you can recoup. I don't know if you guys are familiar with the story in Canada. There was a Bitcoin exchange where the founder passed away in India. He had, I think it was $180 million that they couldn't locate because only he had the information in what's called a hot wallet or a cold wallet, one of the two, where only he had the information. They couldn't encrypt it for like a really long time. And because he was in India, they're saying, did he really pass away? Did he get all this money? And people who were involved in the exchange, I think still aren't able to recoup any of their funds because in Canada, they're still giving them 60 days to declare bankruptcy and shut it all down.
Yep, it's true. This is definitely an area where there's just not a lot of understanding of what the impact of the lack of regulatory control is. I mean, for those in developed countries, we've taken for granted, I think, for a while, what it means to have a regulatory infrastructure behind your finance system. So, for example, if a bank goes under, my money is probably insured in that bank up to about $200,000 now, that based on some of the latest changes that were made in the law back in 2009. I might lose, if I had $1 million in that account, I might lose some of it, but I'll at least get $200,000 out. Because someone will pay me out. But in these digital currencies, you got two problems. Number one, there is no government who cares. They're not being paid to care. So no one's going to make you whole. And then the second thing is, this is the challenge with digital currency. We go from, in the old days where we had gold-backed currency, right? Literally, you had a piece of paper, but there was gold sitting in some bank someplace that was backing it up. That's not the case anymore. And then when you literally have digital, it's just zeros and ones. And if they get wiped out and there's no record of it, you literally could be left without, losing all of your money. And so it is a new area. There are a lot of people who aren't, there's a lot of good opportunity and then there's a lot of risk.
And on that note, we will conclude part 1 of our interview with Frank Bria. Stay tuned for part 2, where Frank discusses cybersecurity, data security, regulatory infrastructure, the role of the virtual assistant, cash flow management, and he gives advice on learning more about the industry. For your hosts, he is Oliver Yarbrough, this is Kirk Hunter, and you have been listening to the voice of the AI revolution. Be sure to check us out on our website, www.airevnation.com. We'll see you there.